Hi guys, I'm Viruthan. In this video presentation, we are going to learn about the part 2 of principles of double entry. If you haven't watched the first part of this session, we have given the link in the description, so go and watch first. If you are new to this channel, don't forget to subscribe it. Let's go to the video, the part 2 of principles of double entry. In the first part, we have discussed about the double entry and we have go through 3 examples. So in this case, we are going to discuss about the credit purchases. In the third example, we have told we have purchased for cash. That means we are going to purchase and we are going to pay them in that moment. But here, the fourth example is credit purchase. What is meant by that? We are going to purchase for credit. That means we are going to purchase now, but we are going to pay them in the near future. So in this case, we can tell when we purchase, the expense is going to increase because purchase is an expense. When we purchasing, the expense is also going to increase. At the same time, the creditors is also going to increase because when we are buying from creditors, the amount we should pay back to them is also going to increase. So we can tell the liability is going to increase. At the same time, expense is also going to increase. So from that, we can tell when there is an increase in expense, we are going to debit the entry. At the same time, we are going to credit the liability because there's an increase in liability. So we have already learned purchase account is an expense. So we are going to debit purchase. At the same time, we are going to credit liabilities account. That means trade payable. So if we see that fourth example, we are going to debit purchase. At the same time, we are going to credit trade payables. So the next example we are going to learn is purchase returns. What is meant by purchase returns? You should be very clear with this. Let's take an example. I'm buying 1,000 apples from creditors. I should pay the money in the near future. I'm first buying 1,000 apples from them. When I received apples, I have found that 10 apples are not in the good condition. So I'm going to return the 10 apples. So in that case, we are going to call that purchase returns. That means I have purchased, but I'm going to return it because it's not in a good condition. So in that case, we won't register it in the purchase account. We are going to create an account as purchase returns. In the fourth case, we have an account, a purchase account, but in the fifth case, we are going to introduce another account, purchase returns. Most of the students will confuse in this area because they try to register in the purchase account. So carefully note this point. Purchase returns is another account. So when we are returning the purchase, we will register it in a purchase return account. As we all know, purchase is an expense account. At the same time, we are going to tell the purchase return as an income account. So let's take an example. I have $5,000 for creditors. The creditors amounted to $5,000 because of the all transactions. At the time, I'm going to return $1,000 product. The things I have purchased this time, but they are not in the good condition. So I'm going to return that purchased items only $1,000 amount. So when I'm giving back the things, the items not which are not in the good condition, I don't need to pay the $1,000 because I have already purchased for $5,000, but I'm returning the $1,000 amounted the goods because of they are not in the good condition. So I don't need to pay back $5,000 again. I should pay only $4,000 because I have given the $1,000 things. So I don't need to pay $5,000. So in this case, the creditors, the liabilities is going to decrease. First, I should pay $5,000, but when the purchase returns happens, I should only give $4,000. So creditors amount is going to decrease by $1,000. So we can tell when we returning the purchase returns is an income. The income is going to get increased. The purchase returns, when I'm returning the purchase returns increases. At the same time, liability, the amount we should pay to the creditors is going to decrease. As we all know, when there is an income increase, we will credit the entry, and the liability decrease, we will debit the entry. So let's go to that example. When we returning the purchase, I have already told we are going to debit liability. That means debit trade payables account. At the same time, we are going to credit purchase return, the income account. Purchase return is a new account. Purchase return, we are going to credit purchase return. So try to understand this situation. So the next item would be easy for you, settlement of payables. What does it mean by that? We have $4,000. We should pay $4,000 for creditors. Now I'm going to pay $4,000 for creditors. So we are going to tell that settlement of payables. When I'm giving to $4,000 for them, the asset is going to go down. That means I'm going to give my money, the business money, for them. So the asset of the business is going to decrease. At the same time, liabilities, the amount we should give to the creditors is also going to decrease. After the paying transaction, asset is also going to decrease. At the same time, liability, the amount we should pay for the creditors is also going to decrease. So we can tell when the asset decrease, we should credit the entry. That means we should credit cash account, the asset account, the cash account. At the same time, we are going to credit, we are going to debit, because when there is a decrease in the liabilities, we are going to debit the account. So we are going to debit trade payables account. So let's go to that example. When we are settling to creditors, we are going to debit trade payables, because trade payables is a liability account. If there are any decrease in the liability account, we are going to debit the entry. At the same time, we are going to credit the cash account, because cash is an asset. When we are paying back, the asset is going to go down. So we are going to credit the cash. I hope this video would be useful. In the part 3, we will continue the other transaction. So join with us. Thank you.